Yes, ma'am.
Thank you. Good morning, everyone, and a warm, happy GST Day and Chartered Accountants Day to you all. Today, we celebrate two things that go hand in hand: the GST reform that united India under one tax umbrella, and the CA profession that keeps that system running smoothly. There is no better way to honor both occasions than by hearing from someone who lives and breathes GST every day. It is my pleasure to introduce our speaker for today, CA Abhishek Raja Ram, FCA, DISA, CCGST, CCIDT, and CC Valuation. He is senior partner at Abhishek Raja and Associates. With 17 years of practice and teaching experience, he leads a team of chartered accountants serving clients across many industries and is a nationally recognized author and trainer on GST and indirect taxes. Please join me in giving him a warm welcome. Welcome, sir.
Thank you, madam, for this nice introduction. And good morning to everyone and wishing you happy CA Day and GST Day. So can I start?
Yes.
So friends, the topic is from advisory to litigation and till the end how to handle audits. But let's understand from where this advisory part starts in GST. It starts from the basic when someone contacts you and requests you, sir, whether we are supposed to be registered under GST or not. That's the first thing we need to know. So whenever a client comes, we have to assess it. That whether the party is making a taxable supplies under GST or not. So first assessment is whether there is a taxable supply. Now comes of the threshold part. Then whether the supply is of goods or services or both. Then whether it is a mixed supply or composite supply. Then the threshold part. So what is the threshold? If it comes under voluntary registration, then you have a choice. You can get registered even for 1 rupee transaction. There are certain transactions where you need to get yourself registered once you cross a certain threshold limit, or even if you are dealing in one transaction of that, irrespective of the amount. So the threshold for goods are usually 40 lakhs. In some states, 20 lakh. For special states, it's lower. It's 10 lakh also. Then for services, it is 20 lakh. And for some states, it's 10 lakh. These are special category states. So when we understand this part, so first is whether the party needs to be registered or not. So because this creates a legal liability and onus on you to get yourself registered. There are few cases. Okay, audiences. Okay. So there are few cases where department has searched, conducted a search, or visited what we say door-to-door places in the market, and later on they thought that this party is need to be registered. They have passed an order providing them temporary registration and also uh, calculating a legal liability, which considering that they should have been registered from the day one or from back date, and calculated tax and issued a demand notice. Now, what could be the sense? Now, if some clients come to you who has been subjected to such notices from the department, that whether they need to be registered or not, or how to handle this notice because they have not collected an index. Now, it could be a possibility that they are dealing in certain goods which they thought that this is an exempt, or they were unaware of what we say tax liability or the threshold. See, ignorance of law is not an excuse, barring few exceptions. So ideally, they should have got themselves registered. Now, recently, we came across a case where the dealer was in dealing in food grains and he was not supposed to get himself registered. During a survey of the market, now a demand notice was issued to him that he should have been registered from back date. Department felt that there are taxable supplies also. Now, during that part, we assisted the party and we proved that except food grains, the party has not dealt with anything. Whereas department was of the view that okay, that these are branded food grains, though he was an alatia type of thing and not registered. So from day one, so the advisory part starts from day one. Then second comes, okay, now once you define it whether one has to be get himself registered or not, then comes whether it is a voluntary registration or what we say mandatory registration. See, because both of the things changes. So in case of mandatory registration, you can get 30 days from the date of original registration. So the date you become liable for registration. So from that day, so when you will file, okay, uh, I need to get myself registered on the mandatory provisions. So that changes it. So the change is about the ITC liability, ITC credits. So from the date you become liable to get yourself registered due to certain transactions, and you have filed application on that day or within 30 days. And later on, registration has been granted. So registration would be granted from the date you became liable, and subject to that you have filed complied with registration provision within the mandatory time limit. When we come to voluntary registration, so the registration is effective from the date of order which has been provided. From that day, ITC provisions, so whatever you have held within purchased within 1 year before the date of registration. So in that case, it would be when you were liable, and in that case, when registration certificate, I think the date mentioned on the registration certificate, then it starts. The third could be your client participates in exhibition, a temporary registration. So let's say, in our case, let's say the party is registered in Mumbai. It's dealing there. Now, for let's say for trade fair during November, the party wants to get themselves participate in trade fair in Delhi. So now for this, they need a temporary registration. So they will apply in Delhi for registration, and the application should be filed minimum 7 days before the date of exhibition, from the date which they want to do, and then they will get themselves registered. So now handling these matters, advising whether someone needs a permanent registration or a temporary registration is crucial. One more thing, when we come for temporary registration, as you all are aware that normal registration is valid for lifetime unless department cancels it or you apply for cancellation. Now, the temporary registration is valid for only certain period which has been mentioned, 3 months 3 months extension could be there. But for temporary registration, you are supposed to provide a calculation that this would be my demand, sorry, my tax liability, and you are supposed to pay this in advance. So whatever estimate is there that you want to go for exhibition, let's say in my example, the Bombay party wants to come in Delhi for trade fair. So whatever they expect of their sales in during trade fair and whatever the differential tax liability would they expect, they have to pay it before registration. So this comes with a financial burden also. For temporary registrations comes with a financial burden also. So this is also important. One more thing is in your regular course of registration, you would be having a permanent address for the business premises, or you would be having all the documents for registrations and everything. Vis-a-vis when you are moving to another state for temporary registrations, you might be you might be facing problems of proper rent agreements, proper agreements. So usually there would not be any place where you can get yourself registered, or where you can say, so no, this is my office premises. No. For example, which we are dealing with is registration in Delhi for trade fair. Fine. So the Mumbai party might not be having any offices in Delhi, which they can say this is my principal place of business. No. So what they would be having, they would be having a simple letter that uh, the trade fair organization would be international trade fair organization would be allotting them one shop, the temporary one, during 14th November to 20th November. Let's say this is an example. So which shop would be allotted to them? It's not clear in the note, in the allotment letter. Can they enter today to that premises? The answer is no. Can they get it verified? The answer is no. So these all complicate the things. You must appreciate the fact that as a tax consultant of that party, which is going to get their temporary registration. See, physically you are not in that state. So you are a consultant of that firm. You are located at Mumbai. The party is located in Mumbai. A physical hearing or something like that in Mumbai or in Delhi. Now, how to deal with such kind of situation? Let's say the department issues a show cause notice and calls you for personal hearing or for verification of documents. Now, this is a small job. The client might say it's a simple thing. Client might have experience of registration in 2017. So when he got his first registration in July 2017, he would have uploaded half of the document or not full documents, and he would have got registration same day or next day itself, because that was a different scenario. And registration is going fine. Till date, he has never faced any problem. So for permanent registration, everything was smooth. And for temporary registration, you might be facing a problem. So this complicates relationship with the client also. Third issue, which many people might be facing, or many tax consultant might be facing. Now I'm first discussing the geographical location issue. In continuing this example further, you are a you and your clients are located in Mumbai. Now you were supposed to send some goods in, let's say, uh, to any part of India. Now you hit send the goods to Chandigarh. In between, in any of the state, the goods are intercepted, the vehicle is intercepted, and due to some clerical error or mismatch or whatever it might be, now your goods and the vehicle, transport vehicle, are seized, and a temporary registration number has been issued to you in any of the remote locations. Now, after paying that tax amount and penalty, your goods and vehicle are allowed to be or to move or released by the department. Now, what happens? You had paid double the tax, and you still feel there was a small clerical error which should have been, which is not intention to evade tax. Now, the officer was harsh, and it should not have been happened. Now, you want to litigate this issue. So, the penalty under section 129, and now litigation would be that you would be filing an appeal under section 107 with the first appellate authority. But the problem is that you cannot dispute or you cannot contest that amount in your territorial jurisdiction, that is Mumbai. No. So you cannot file an appeal. Let's say the goods were intercepted in Rajasthan. Fine. Some remote location in Rajasthan. A small town. Not saying Jaipur, Jodhpur type of cities. Some small town it was intercepted. You had deposited tax. Now what has happened? You cannot litigate this tax payment which you have made in remote location in Rajasthan at Mumbai jurisdiction. No. Can you litigate it in Chandigarh location where your client is there? You can take some support from your client also. The answer is no. So where you have to litigate this part? So the order has been passed by Rajasthan. Let's say Rajasthan State GST Department officer. So now you have to litigate it his boss, his first appellate authority. Let's say that appellate authority is in the same location, the remote location in Rajasthan, any small town where it has been intercepted. Now, as a tax consultant, as an advisor, how challenging it could be. Now, let's say the amount is also not big. Let's say it's only a small amount of 2 lakh or 4 lakh rupees. So filing an appeal. So when penalty was levied, so department had issued you a temporary number. Now, first thing when such things happen, your this vehicles are intercepted. The first thing you have to do that they will start their action on the name of the driver of the vehicle. So they will intercept and they will say they will start all the proceeding in the name of the driver. Now, first thing once vehicles are intercepted, what you have to do, you have to send a letter and officially claim that these goods belongs to me, our company, so that all the registrations and all the proceedings from here and after are converted in the name of your company or let's say in the name of your director. So one thing is should be there that the director or the person in the name of whom you are starting these proceedings should be the one who is available for litigation purposes also. It should be ideally should be your promoters or the owner of the business rather than employee who is sitting in that position signing authority. So that later on, if things go further, then proceedings continue. You don't have any problem with signatures and these all things. And advisors have great role to play in this. So, so the owner comes forward, take ownerships or claim ownerships that, okay, these are my goods. I am responsible, and for any mistakes, okay, I am making this payment or our company is making this payment, and I reserve the right to litigate from here and after. And then you will, once after payment goods are released, you will file an appeal under section 107. Now, what will happen? That's a remote location. The owner does not know anyone in that remote location. Even their clients might not be able to support them because the client is located in Chandigarh. And this remote location in Rajasthan is equally not known to both of them. Rare chance. Oh, so first thing, if you have any support, any link, that's okay. Otherwise, for this, you have to travel. You have to do physical hearing, unless you request for online one. The worst thing which could happen to you that on that day when you reach the remote location, now that day the officer is not available. He has gone to some meeting, or there's a holiday, or there's something by the reason that someone cannot have this or this what we say hearing cannot be done today. Then the problem is you cannot return that day. Let's say they say that okay, tomorrow also you cannot have hearing. We will let's say the clerk says or the steno says okay, we will tell you about this. We will inform you the date. Now this is a major problem, big problem. So now we have got one question, and see, keep it as interactive as it can be. And during the session, you can ask so many whatever question you feel, whether it is relevant to this discussion topic or not. So we have got a question from Mitul Nayak ji. Good morning, Mitul ji. Manual appeals need to be filed. Sir, it depends. If the order is online, then you have to file an online appeal, and usually a temporary registration number has would be issued to you. So a temporary registration number will be there, and you will pay. Okay. So for see appeals, if it is for appeals, if they are manual orders, then it would be filed by manual appeal against it. It is an online order, then appeal will be filed online. Usually, states generate a temporary registration number to you, and then they allow you to file an appeal. See, tax has already been paid. The issue comes of payments when uh, you have got your vehicle and goods released without paying the penalty amount rather than providing a bank guarantee. So bank guarantee is also a way where you can get your document released. So if you have provided bank guarantee and later on these you had requested for release of the vehicle, then while filing an appeal, you would be seeing normal case of business when once you are filing an appeal, you are paying 10% amount as pre-deposit, but when the matter is of penalties, then you are supposed to pay 25% as well. For that, we should go for casual registration process. No, 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 no. Mitul Naigi, you see, for all practical purposes, they don't ask any document from you. They just create a temporary registration number. And then you make the payment against that. They will help you in generating a challan and making the payment through that way. DRC3 or that way. So they will ask you to make payment online, and then so they will not ask any document from you. They will not ask. They will do it themselves. And in fact, this was a litigated point few months before. Um, so, and Mithul Nagi, you have raised a very great question, very important question here. That what sort of documents are needed for registration, and what kind of registration would be this? So, what happens when we this is a practically what happens that when we ask for fresh registration, a regular one, department keep on asking us so many documents. And usually whenever we file any document or first application, they keep on they issue a show cause notice and they ask many queries from us. Then only they issue us a registration. Vis-a-vis, and that registration is issued by your regular assessing officer or the proper officer. Now these casual registrations are issued by the mobile squad. So there was a debate whether this mobile squad has the power to issue us a registration or not. Also, why they are issuing us a registration, whether it is a casual one or a temporary one, which is a normal, what we call it in our common parlance. So whether such registration, do this mobile squad have the power? Are they authorized to issue us a registration without we requesting them to issue a registration? So So recently they have amended the law and they have provided a mobile squad the power to issue us a registration. But Mitul Nagji, you have raised a very valid point which has been part of debate in the elite circles. The experts have been debating on this. But for all common practices, there are two things. One is academic debates, and second is what practically it is happening. So your question is from that debate, and that is the courts or the law to tell us the answer vis-a-vis when we go with the practical one. We are usually more bothered about making how we will make payment and how our vehicle is released. Okay, vehicle is released, and then we will say, okay, we'll file an appeal. We are more concerned about filing an appeal and getting the refund of that amount which we have paid earlier. So this is one thing. So as an advisor role, so today I am here to discuss more of an advisor role. And maybe some other day, educating will help me talking with you, where we will discuss the topics for elite or the expert topic or the advanced level, where we will be debating whether this registration is casual registration or it's a regular registration, what sort of document they should have asked, and without those documents, whether this registration is valid or not. Deferring this question on that way, but answering the advisory part. So we have got one more question from Chandru Babuji saying, can the goods and vehicle be released by paying 10% of the penalty and taking the rest by appeal? The answer is no, because in those cases, see, the law is clear that that deposit should be of whole of the amount of the tax and penalty levied, or by providing bank guarantee of the total amount plus penalty part. And when you file an appeal, see, in scenario one where you have paid total amount, then no need to deposit anything for appeal. Pre-deposit is zero because 100% of the tax and penalty has been paid. If you are filing an appeal, in case of bank guarantee, then the payment amount is 25%. So first you will get your vehicle release, then you will go for appeal. That's the way. Third option in many cases was that many taxpayers have gone to high courts, and we have a classic judgment and a landmark judgment from Honorable Supreme Court in Cape and Fragrance case, where what has happened in many cases, vehicles and goods were intercepted and penalty and tax was levied. And against this order, the taxpayer has directly approached to Allahabad High Court. And Allahabad High Court, after considering that there was flaws and they were clerical errors and so many things, they have allowed release the vehicle without payment of anything. So the vehicles were released without paying even 10%, where they were approached directly to Allahabad High Court. So not paying anything to the department, not filing an appeal, directly approaching to Allahabad High Court through writ. Now, state of UP, state GST department of Uttar Pradesh went against these judgment and approached Supreme Court, where they raised the issue of following the procedure. And Honorable Supreme Court said that we agree that the procedure has been provided in the GST law itself. And the procedure is either you pay 100%, get your vehicle release, or provide an equivalent amount of bank guarantee, get your vehicle release, pay 25% and file an appeal and prove your innocence before appeal, first appellate authority. And if not, then you can go to tribunal or you can go to high court, whatever it may be. So, Honorable Supreme Court in that judgment, Cape and Fragrance, said that okay, High Court does not have the power to release the vehicle without following the procedure of payment of 100% of tax and penalty or providing amount equivalent, the bank guarantee equivalent to the tax and penalty. So, um, so if we say 10% paying penalty, no, because amount is 25%, and that would be only in case when you have provided bank guarantee of equivalent amount. So academically and legally, this is not possible. Of course, any high court can give any kind of judgment. Whether goods repayment can happen at remote place on the ground of mere verification of genuineness. So goods can be detained on any issues. In last 8 years, what I have understood, see today we are celebrating 8 years of GST. And in 8 years of GST, what I have understood, I will summarize in one line, that everything in GST will end up at reconciliation and litigation. So you will be needing reconciliation and litigation. And in next 5 to 7 years, you will find that every of your client has received any kind of notice which you would be litigating or providing reconciliation of various documents. I hope we will to convey. So let's move ahead. So e-way bill has been done, registrations has been done. Let's go ahead. I'll have 20 minutes for that. So third thing is, once your registration is going on, many times that you are subjected or your client is subjected to notices. And notices could be of various types. There could be SMT 10. We had seen DRC 1A, we have seen DRC 1, and DRC 1 for 73 and 74. We have different timelines for 73, 70. So from 2024-25, there is no 73, 74. Those sections have been merged into 74. We have a new sections. So 73 is for 30, order has to be passed and served to you. 73, 36 months minus 3 months notice serving time, and for 74 it is 60 months minus 6 months. Fair enough. 54, 33, 36, 60. That's the timelines. And that is from the date of annual return, and for initial years, the date for this uh, annual returns has been extended to various times. So there is mm, different type of dates which we had for first 2 years. So to come for the first adjudication notice, that is ASMT 10. So if you have received ASMT 10, you will apply in ASMT 11, and order will be passed in ASMT 10. Now ASMT 10, what sort of demands or what sort of questions could be asked in ASMT 10? See, the purpose of ASMT 10 is scrutiny of returns. So whatever errors or disparity are there in GST returns should become part of ASMT 10. Now, there is a mismatch in GSTR1 and 3B. There is a mismatch in GSTR1, GSTR9, 3B versus 9. 2A credit as per 2A, 2B versus credit as per GSTR 3B, disclosures in 9, 9C, and some demands not paid there or some fresh credits claimed through GSTR 9 should be part of ideally ASMT 10. But what has happened? We had seen these queries raised through DRC 1 also. So we could have a question, or we should have a question, whether such demands on scrutiny of return should be part of one DRC 1 or ASMT 10, or whether directly in such cases ASMT 10 can be issued or not. See, we have one judgment from Honorable Guwahati High Court where Guwahati High Court has held in case of PepsiCo. See, there was a difference between something GSTR 3B and 9, and department has directly issued DRC 1. So Guwahati High Court said, no, you cannot issue directly DRC 1 because this notice is based, or the premise of this notice is scrutiny of return, and scrutiny of return should be covered under ASMT 10, and therefore notice should be issued in ASMT 10, not in DRC 1. Other than this, whenever this matter has been come before any high court in India, all have said that there is no mandate to issue ASMT 10 before DRC 1. Now, if you have merits, then you should not dispute this, that whether DRC or ASMT 10 has been issued before DRC 1 or not. But if you see or believe that your merits are weak, then you can definitely raise this issue that ASMT 10 should have been issued before DRC 1. As far as return related issues are concerned, fine. You see, as a good advisor and in litigation, you should think of pros and cons. And sometimes when we file an appeal or when we reply to notices, we write certain things, but we do not press them. And at end of that say, we usually write, okay, we reserve the right to litigate this matter at higher forum. This is the standard way how we litigate. Then there are issues. Let's say DRC 1 is issued. No, DRC 1 under Section 73 should usually cover these kind of issues, that versus GSTR 1. Let's say e-way bill are of the higher amount, where GSTR 1 and 3B are for lower amount. See, there is a difference between uh, e-way bill and invoice. Invoice is for supply, whether for goods or for services or for both. Vis-a-vis when we go for e-way bill. So the e-way bill captures the movement of goods. So the movement of goods could be for supply or it could be for otherwise also. So what could be the otherwise one? See, movement of capital goods between one distinct person to another distinct person, or sending goods on approval basis, sending goods to my job worker, sending capital goods to my job worker, or sending molds and dies to my job worker. And these all become part of my, what we say, e-way bill. So there could be genuine reasons where my e-way bill amount or e-way bill would be higher than what we say, uh, than what supplies or my sales in GSTR1. So that could be a reason. Now, this could be a valid reason for issuing a DRC1. Now, one more question comes whether DRC1 is mandatory or not. Whether DRC1A should be issued before DRC1, is it a mandate? See, when GST law was implemented on 1st of July 2017, it was a mandatory requirement. The word used was shall. Later on, it has been converted into, the shall has been converted into may. Now we don't have word shall. We have only word may. But various courts various courts have unanimously said or held that DRC1A is mandatory. So, see, it's the interpretation part. May, even the word may has been read by high courts as shall. The word is may, the grammatical meaning is as per the wish of the officer, but courts have interpreted that may as shall. See, one of the objective of GST was to reduce litigation. And if you remove pre-show cost consultation, DRC1 is pre-show cost consultation, then you are enhancing litigation. You are not providing them a chance to deposit amount before issue of notice. The law provides multiple levels, multiple opportunities to pay. So if you pay if you pay taxes at DRC1A level in 73, you don't have any penalty. See, though mechanically the department will come with all sort of penalties, and ideally penalty proceedings should be different than tax proceedings. But in GST, there has been match up systems. Department comes with penalty also. So that is a different issue. But that was not the objective. Now let's come back to our DRC 1 for 73. Then we had seen DRC 1 for 74. See, 74 notice under section 74 can only be issued when there is a willful suppression, misstatement, intention to evade, fraud. But what is happening in many of the cases, I'm not saying in all of the cases, in many of the cases which I have encountered, Department has issued notice under Section 74 just because the timelines for 73 was over. Especially for 1718, they had issued notices in 74 and previous year, August 2024. So for 1718, the timelines were for September 2023. The timeline for issue of notice was 30th September 2023, and for the order was 31st December 2023. So at that time, it was because they missed the deadline, they had issued notice in 74 in August 2024. So now, when this notice comes under 74, now as a consultant or as an advisor, now you have two options. See, when we contest the case, we usually go with two approaches broadly. And see, I'm not saying that which approach is good, which approach is bad, or that we should follow only one. No, we could follow both approaches in our litigation part, or we can have mix of both approaches, the best of both worlds. So there are group one who contest on the merits. There are group one who contest on the merits. Now on the merit, there are further two subdivisions. So the merit could be based on facts and merit could be based on interpretation of law. Fine. So there are two broad subdivisions. First is merits, and in the merit part, there are two broad subdivisions. First is facts, second is interpretation of law. So your merits could be from facts. Could be. Now we come to second part, the broader second part, not merits. This we call as jurisdiction. So the jurisdiction is further divided into two parts. It could be based on procedure, where the procedure has not been followed. And the second part would be the broader framework, the powers, whether this department has the power to initiate this litigation or not, or whether they has the power or there has been so the procedure violation could be that incorrect use of form, and the power could be that that this is the officer, this has this much amount of the power, monetary limits, he has violated the monetary limits, or the time period, the notice is time barred, the grounds on which the notice should have been issued is not the is not provided, or allegations are not clear. So the allegations which are levied are not clear. So we mix up everything. So you should take best of both worlds. You could litigate based on both things. And then only you will be able to get best of the result. So when 74 notices come, you could challenge them based on this, that merits, okay, I do have a merit, but this notices should have been issued in section 73. The department has utilized extended period of time or the extended limitations, whereas the allegation for using extended limitations are not clear in this notice. So you can have merits, but you might like to add this extra layer to win this litigation. No, the notice was not served to me within the time period. This could be an issue. You could raise this ground also. So whatever, see, you have to choose the best of your case. You can mix and match all kind of approaches. So after this advisor roles become important in two aspects also. One is when there is a search at offices or premises of your client, or there is an investigation going on, ongoing investigation. Summons are issued to your client, and everyone fears with the name of summons. First thing, whenever someone comes and the person thinks, okay, they have issued me summon, they are going to arrest me. Or the first question comes, if I go to the hearing, whether they will arrest me. Whenever they come for investigation or inspection, the first thing is people get worried. Okay, if something goes wrong in this search, will they seal my premises? What will they do? How a panchnama would be there? What kind of information they are seeking from me? I have everything which is correct. Now I had received a supply from supplier A. I knew supplier A, but he issued me bill from a company named B. He said this is my new firm, or I have been running my business from A. Now this firm is of my in my mother's name, or my brother is handling this. So you have got goods, you have got supplies from Mr. A. You know them from so many years. You have been dealing with them in and out, but he just changes the invoices and he says, okay, I'm not issuing this invoice from A and this invoice is from company B. I had no reason to raise suspicion at that point of time. I had received goods. Everything was fine. I made a payment in good faith. I never insisted the invoice should be from A. And after, say, 5 years, 7 years down the line, Form B is not traceable. And in fact, Mr. A is also not traceable. And I have read a few days back that there has been a huge amount of refunds has been claimed by B, Form B. And now you are in a mess. And GST officers have visited your premises, and they are asking information about Firm B, and you don't know anyone. You know A, and there is no nexus between A and B. This could be a problem. And now you have a mess. Similarly, a summon has been issued for Firm C, from whom you directly don't know, and this is someone else. So now there could be a problem where you have to advise your clients. Now, if it is someone from some amount, the department says no, you have received incorrect amount of or ineligible amount of ITC. You have received only bills. Now you know your client knows that these are genuine transactions. Now, client may seek your advice whether we should deposit this tax amount or litigate. You have everything, documents, you have made sales, you have made supplies, but the party is absconding. And department is alleging that this party has been or the party has been arrested. They are behind bars or they have come on a bail. They have deposited X amount as a bail guarantee or whatever might be the reason. They are out of it. So now how you are going to handle this? You have a problem. So as an advisor, your role becomes important. Then last thing is audits. So investigation part is different. And my humble suggestion would be that whatever you feel is right in investigation part, please consult some seniors who don't have a soft heart for your client. You might be having soft heart for your client. You might know each and everything in and out of your client, but A second opinion is very important in investigation matters, especially if the amount is substantial, because that carries the risk of arrest of your client. There is no shame in discussing with someone else. You can discuss it with seniors, you can discuss with your friends who have experience in handling such matters. Because once your client is arrested, it will be extremely difficult. Altogether a different parallel universe of getting a bail. Plus, reputation is spoiled forever. The last thing which is as the role of advisor is how to handle audit matters. So audit team usually comes with a larger lengthy time. They say, okay, extended period, we will pass an order in 74, we will go through your books. Usually they come with issues with valuations, issues with 180 days reversals, RCM liabilities. And for RCM liabilities, you know that you pay RCM, you can claim credits, but department, when they are doing audit, they don't allow you to pay it through GSTR 3B so that you can claim it later on. They say no, um, you have to clear RCM dues through uh, DRC 3, therefore restricting your ITC on on payment of RCM liability. And these kind of areas are litigative, also extremely complex, and you should deal with them with utmost care and more of a diplomatic way. See, audits are handled through more diplomatic way rather than being upfront. And same is with investigation matters. But audits, they have longer time, they can go deep, where investigations, they don't stay for a longer period. Man. See, powers are more with investigation teams, especially with DGI have or anti-evasion have so much of the powers. They have the powers to seal premises also. They have the powers to arrest also, though they need permissions. Permissions are usually provided, but audits parties don't have powers to arrest you. But again, they can go deep and they can do more of the damage which you can even not think as far as the financial burden are concerned. Plus, audit party doesn't have more information about your L1, L2, L3, which anti-evasion team or DGGI has L1, L2, L3, L4. And that is the reason where you need to be more, you have to play a more as a role of a consultant and as a bridge between the mismatch between the clients and the audit team. Mm. In that investigation matters, my humble suggestion would be that always and always come with someone, consult some senior so that you remove the chances of error and you you do best for your clients. So this was my discussion for from advisory to audits and what are the different tools and how you should handle with this. And regarding the drafting of notices and replies, see there was a past it was the writing should have been more of a legal terminology, but today the scene is changed. It's better to use plain simple English rather than using technical jargons as far as notice reply is concerned. For appellate matters, we are we definitely need technical words more, but for notice reply should be better off, it should be more plain English and facts should be chronically provided. But there's a difference between two approaches. One group of experts say that you do not need to mention any case law while filing first reply at the adjudication stage, and case law should be provided in appeals. This is um, Group 2 says no. From the very first day, we should open our all cards and we should come with fair view and all the case law should be provided. So I would suggest that it depends on the complexity of the topics. If it is fact-based, focus on facts in first reply. If it is an interpretation issue, then you might use case laws in first part. So with this, whatever I could discuss in this limited time, I had covered my best. Uh, I hope so. This is okay on this day, on GST day and CA day. I was able to help you. Over to you, ma'am. Thank you.
Hi, sir. Thank you so much for such an insightful and engaging session today. Your practical tips, deep knowledge, and real life examples have truly enriched us all. And on behalf of everyone present here, I would extend our heartfelt gratitude for taking the time to share your expertise with us today, especially on the special occasion celebrating both GST Day and Chartered Accountants Day today. We wish you continued success in your practice, in your teaching. Thank you once again for joining us and making this day so memorable. It was a pleasure to have you with us today, sir.
Thank you.
Thank you.